everyone. In today's video, we are going to go over the 4 best indicators on TradingView for day trading. The first thing that we'll need to do in order to access indicators on TradingView is to pull up a chart. We'll come up here to indicators, click on that, and then we can search for any desired indicator here. The first one we'll go over is a volume profile, and I personally like the Session Volume Profile HD. Click on that, and it will pull it up on the chart here. The first thing that we're going to do when we get this indicator is go to Settings and make sure that we have all of our parameters set to whatever we're looking for. So I am going to do Custom and make sure that it's from the open to the open, so it pulls the whole day. And let's go to because I am Pacific time and click OK. Oh, one thing I want to point out is that the value area is default always set to 70%. You can extend the POC to the right if you'd like. Extend the value area right and the value area or the low and the high to the right as well. Right now I'm just going to have the POC extended and click OK. Now that we have the volume profile on our charts, let's go over how to understand the volume profile and what it tells us. So the volume profile calculates and aggregates trading activity at distinct price levels over a specific period. It visually represents this distribution on the price chart, highlighting areas where the market has shown the most interest. This includes the value area, comprising a specified percentage of total volume, and the point of control, the level with the highest volume. These aspects are crucial for identifying key support and resistance levels, making informed trading decisions and understanding market sentiment. When it comes to practical application for day trading, in regards to the volume profile, we're going to look at key support and resistance levels, spotting breakouts and breakdowns, trend confirmation, trade management. We're also going to combine it with other indicators. And lastly, but not least, we're going to be able to analyze market sentiment and fine-tune entry and exit points. Now, one thing I want to do is not only go through these indicators, but go through some technical analysis in conjunction with these indicators. So right now I'm going to come up to the indicator and click on this little eyeball to hide it. And we will do some technical analysis on this formation that has just recently formed. After the FOMC, we had a nice rally, broke above this range and started to establish a new value in this area. So the first thing I noticed is that when we rallied, we started to form a higher high, higher low, came up to test or to create new highs, came down, and then the market started to fail at this point, and it's starting to look like a head and shoulders. So what I'm going to do is I'm just going to mark this with some horizontal lines and build a thesis with technical analysis, and then activate the volume profile to see what points of confluence we can find in the market to further develop our thesis. So this would be the left shoulder, the head, right shoulder, and then we started to break below it, came back up and tested this area right there. I would say like that. And then we'll get a rectangle. And there's a lot going on here, but it's almost like we had this form as the neckline. This was the right shoulder that just didn't make it up as much as this one. We started to break down, but it rejected from this area and started to rally back up. And then there are some points down here that we hit. Okay, so now we have some basic levels here. Probably one more right around this area. Somewhere in here. So when we bring up this volume profile, we want to see if this market is indeed coming down, where are the most likely spots that sellers are going to take profits? Where is it going to have some congestion if and when it comes down? But we can see here that on this move up, let's scroll this out. On this move up, and again, this volume profile is just for the session. So all of this volume ends at this bar. Then it creates another session volume profile and another one. But on this move up, we had some volume in this area. So as price moved up, there wasn't a lot of volume traded in between this area. There was a lot of business in this area, as you can see on the volume profile. Rallied up above it, started to fall down, but you can see that when price started to come back down, it stopped at the edge of this volume right here. And we mark that in here on the chart. So when we develop a thesis for any potential trades, we can see that price might have some difficulty coming to this area, because anybody who sold here and hung on to their position, when price comes back down, if they want to mitigate their risk and assuming that they're still in the position, they're going to turn into buyers here, which is why when price comes down, it rejects off this area, also known as seller's remorse or buyer's remorse. But we can see that price had some reaction here to that. So came back up to test this area right here, which if we move this over on this session, we can see that the value area on this session, there was a lot of volume traded here, also indicated by the value area. So price came back up to test that area right here. There's the value, the bottom of the value area, but I would say there's a lot of volume traded here. So I'd almost move that down to reflect this area. So prices come back down, but we can assume that if price is going to come back down, this is an area that it might have trouble getting into. So we can develop a thesis off of that. If it comes back down, I would expect it to potentially go to the bottom of this value area right here, indicated with this line at 52.75 quarter. And then the other thing we can do is get a Fibonacci retracement from here to the high and see if any other points match up. So this is the 50% retracement at 78 quarter, and we marked in on this chart support right here and the bottom of this value area at 75 quarter. So now we have some clear points of confluence if we are taking a short trade or we want to speculatively enter on a long trade here. We have some points that are matching up now, not only with the technical analysis, but with the volume profile. The next indicator we'll look at is the SuperTrend indicator. So again, come up to indicators and type in SuperTrend. Activate that, and it will be placed on your charts. The SuperTrend indicator is a trend following tool that becomes especially powerful for futures trading. The indicator helps traders quickly discern bullish or bearish trends, offering a straightforward approach to real-time adaptation of trading strategies. This trend following tool is powered by two critical dynamic values, period and multiplier, and is underpinned by the concept of average true range, also known as ATR, a measure of market volatility. The essence of the SuperTrend indicator lies in its use of ATR, which assesses market volatility by analyzing the range of prices for a security over a specific time. The true range is calculated as the highest of the current high minus the current low, the absolute value of the current high minus the previous close, and the absolute value of the current low minus the previous close. To determine the ATR, a series of true range values are first calculated and then averaged over a chosen number of periods. This results in the moving average of true ranges. The SuperTrend indicator combines this ATR value with a set multiplier to generate buy and sell signals, which are visually represented on price charts. There are a number of different applications with the SuperTrend indicator in day trading futures: trend identification, real-time strategy adaptation, risk management, and enhanced decision-making. A simple strategy we could use with the SuperTrend indicator is to identify our original thesis and then only take short trades when price is below the red SuperTrend line, or buy trades when price is above the green SuperTrend line. The third indicator we'll go over is the RSI. RSI is a very well-known and common indicator amongst traders. The RSI aims to provide a straightforward method to gauge overbought and oversold conditions in the market. It operates on the principle that in an uptrend, there will be more up closes than down closes, and vice versa in a downtrend. This indicator calculates the ratio of these up moves and down moves over a specific look-back period, typically using a 14-bar exponential moving average. The resulting RSI values range between 0 and 100, with readings above 70 indicating overbought conditions and those below 30 suggesting oversold conditions. There are two RSI indicators that I like in TradingView. The first is labeled Relative Strength Index, so we'll go ahead and add that to our chart here. The other is the RSI Divergence Indicator, and I'm going to add that as well. Now, the difference between these two indicators is that the divergence indicator will actually label when there's a divergence on the RSI. So if we take a horizontal bar here, we can see that when price came down here, RSI was right here. As we move further down the chart, price made a new low, but we can see here that the RSI did not, indicating a divergence. Again, these two indicators are exactly the same in terms of how they calculate RSI. This one is just going to show divergences, whether they're bullish or bearish. The only other difference between these two indicators is that the top one has a built-in moving average. If you wanted to change those parameters, you can come to the indicator itself and click on Settings and change the moving average length here, as well as the RSI length. When it comes to incorporating a trading strategy, you could say, again, in conjunction with our original technical analysis, looking at levels and targets, you could say that you only want to sell when price is significantly overbought, or buy when price is significantly oversold. The most common applications for futures trading with the RSI indicator is identifying divergences, customizing for different market conditions, integration with other indicators, and directional bias identification. And the last indicator we will go over are Bollinger Bands. Bollinger Bands consist of three primary components: a moving average, traditionally set to a 20-day period, and two standard deviation bands on either side of this average. These bands adjust automatically to the current market volatility, providing a dynamic view of price fluctuations and potential extremes. There are four major applications for day trading futures with Bollinger Bands: volatility insights, identifying market extremes, trend continuation and reversals, and integration with other indicators. Once we have that on the chart, we can come up here to the indicator itself and click on the gear icon. The length is set to 20, and the standard deviation is set to 2, which are the default settings. One of the most common strategies with Bollinger Bands is called the Bollinger Bounce. When price touches or breaches the bands, they often revert towards the moving average. This bounce can serve as a signal for futures traders to either take profits or enter new positions, anticipating a reversion to the mean. So here we can see, in conjunction with our technical analysis, if we wanted to short this level here at 10.5 or 10.75, Price came up to the upper bounds of the Bollinger Band, touched it, reverted back to the mean, again came up to touch it, broke through the mean, and then touched the lower bounds of the band. Those are the 4 best TradingView indicators for day trading. That's all I have for you today. I hope you enjoyed the video. If you have any questions, please visit us at optimusfutures.com. Thank you.